Welcome to Wall Street Confidential. I'm Aaron Tusk, joined again by Jim Cramer. Jim, welcome.
Good to see you.
There's a lot of economic data out today, but I want to talk about something else first. Again today we have a lot of misdirection from the futures. Futures pointing to an up market, and, as of right now, it's actually down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short in my hedge fund, and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Or if I were long and I would want to make things a little bit rosy, would go in and take a bunch of stocks and make sure that they are higher, and maybe commit 5 million in capital to do it. And I could affect it. What you're seeing now is probably a bigger market now. Maybe you need 10 million in capital to knock the stuff down. But it's a fun game, and it's a lucrative game. And you can move it up and then fade it. That often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures. And then when the real sellers come in, the real market comes in, they're going to knock it down, and it's going to create a negative view. That's a strategy very worth doing when you're valuing on a day-to-day basis. And I would encourage anyone who's in the hedge fund industry to do it because it's legal, and it's a very quick way to make money, and very satisfying. By the way, no one else in the world would ever admit that, but I could care.
That's right, and you can say that here.
I'm not gonna say it on TV.
Well, there's so many more hedge funds today than when you were managing your hedge fund. Does that exacerbate the moves? Or does it make it tougher?
You know, the hedge funds are positioned long-short, not just long like mutual funds. So it's really vital these next 6 days. Because of your payday, you've really got to control the market. You can't let it lift. When you get the research in motion, because it's the fulcrum of the market today. So let's say I were short, what I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation.
Ferment.
You can't foment.
Foment?
You can't create an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So, that's the only sense that I would say that it's illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning, where I would be buying the Qs and stuff. This is actually just blatantly illegal. But when you have 6 days, and your company may be in doubt because you're down, I think it's really important to foment, if I were one of these guys. Foment an impression that research in motion isn't any good, because research in motion is the key today. So you know you would hit this guy and that guy, when you would see an offering. When you see a guy is bidding, you'd wipe out that guy very quickly. What I used to do, if I wanted to go higher, I would take and bid, take and bid, take and bid. And if I wanted to go lower, hit an offer, hit an offer, hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million to knock RIM down. But it would be fabulous, because it would beleaguer all the moron longs, who are also keen on research in motion.
There's a lot of that going on today.
Again, when your company is in survival mode, it's really important to defeat research in motion. And get the percentage of the world and the people talking about as if there is something wrong with RIM. Then you would call the journal and you would get the Bozo reporter on research in motion. And you would feed that Palm's got a killer it's gonna give away. These are all the things you must do on a day like today, and if you're not doing it, maybe you shouldn't be in the game.
Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that both Verizon and AT&T have decided they don't like the phone.
Right.
That's a very easy one to do. You want to spread the rumor that it's not going to be ready for Macworld. And this is very easy, because the people who write about Apple want that story, and you can claim that it's credible, Because you spoke to someone at Apple.
Right, they're not gonna comment.
So it's really an ideal short, and if I were short Apple, I would be working very hard today to get that. And the way you would do that is you would pick up the phone. Then you call 6 trading desks, and you say, listen, I just got off the phone with my contact at Verizon. He has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There is no room for Apple. They want too much. We're not gonna let them in. We're not gonna let them do what they did to music. And you know, I think that's a very effective way to keep a stock down.
Right.
Because the stock's at 84, 85. With a little bit of capital you go buy some January 80 puts that makes it look like there's gonna be something going on. So maybe you give Morgan an order to buy 1,000 January 80 puts. Then you go position limit with a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts, and you just kind of create an image that there's going to be news next week, and that's gonna frighten everybody. Then they all go out and say a large put buyer at UBS, and then they call Pisani again. You have to use those guys, and say, listen, I see a big buyer of puts and I'm told it's SAC, and you would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it.
What's important when you're in that hedge fund mode is to not do anything remotely truthful, because the truth is so against your view that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who is down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting January 2nd you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
You're talking about the mechanics of the market.
The mechanics are much more important than the fundamentals.
But in terms of the fundamentals,
who cares about the fundamentals? Research in motion just blew out the quarter. But look what people can do. I mean, that's a fabulous thing. It's a great thing about the market is it has nothing to do with the actual stocks. Now look, over maybe 2 weeks from now the buyers will come to their senses to realize that everything they heard was a lie. But then again Fannie Mae lied about their earnings for $6 billion.
Right, and Bristol Myers lied.
It's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important, and then you have it kind of a vicious cycle down, and it's a pretty good game and it can be played. It can pay for 1% or 2.
And then do you get long before Macworld? And the expectation that it's gonna be good, and then you go back to the long side?
Well, yeah, because you drove it down. You certainly gotta use the other side.
Interesting.
And there's a case where the January 80 puts can be justified because after I've knocked the stock down to 80 I can buy a lot of common and then play it right into Macworld, where they'll probably introduce the phone and Verizon's gonna take it.
Well, maybe the fundamentals don't matter, but let's talk about the Fed a little bit.
Well, remember, Wall Street Confidential is not giving you the party line. Oh, here's the party line by the way. I spoke to Apple on the phone. I hear the phones are good and Verizon might take it. And as a matter of fact the research in motion sellers, I don't think they know what they're talking about.
The cell phone market, you think you don't want to be involved in that?
The problem with the cell phone market frankly is that these guys are all killing each other, you know? Someone has to take a dive. Motorola and Nokia have to get in a room and just fix price. They've been reluctant to do that because of the various justice departments.
And it's illegal, right?
Well, that hasn't stopped a lot of other companies.
This is true. Jim, thanks very much for being here.